Okay.
It's Ultimate Options time. I'm Andy Tanner. I'm joined by Corey Halliday. How are you, Corey?
I'm doing great. Excited about this class.
This is a huge class, and it's about the mindset. And um, I'll tell you my experience is nobody ever wants mindset. I'm telling you, Corey.
Yeah.
I'm telling you, back in the day, I used to travel years and years ago, and I've traveled everywhere. I used to go with Robert Kiyosaki a lot. Used to go out on my own a lot. And we're talking millions of sky miles here. Taiwan, Tokyo, Australia, Singapore, Rome, everywhere, South America. And you know what people want? They want nuts and bolts. They want nuts and bolts. How do I trade? Tell me, how do I trade? Tell me what to do. What's the first step? What's the second step? And I'll tell you, if it were up to me, after all the teaching that I've done, if it were up to me, before I ever touched this, I would talk to people about mindset. Let me put it this way. I'll ask you a question. Corey and I will pose this question to you. Do you think that wealthy people think differently than non-wealthy people? And do you think you could give a recipe to a person with the right mindset and a recipe to the person with the wrong mindset and get different results? Absolutely, you can. So this is not going to be a comprehensive thing on mindset. It's going to be actually pretty quick. But the reason we place this here is we're getting very, very close now to getting into specific strategies. In other words, the closer I get to what we're going to call nuts and bolts of how to trade and how to do this, the more important this stuff becomes. And I told everyone that I was going to build this course based on what I built the course I wish I would have had before I started. And every class I ever took on this ever dealt with nuts and bolts and said, okay, this is how the trade is. No one ever taught me about the mindset that is required. So you're going to find this is going to help you keep your rules. It's going to be awesome. Let's talk about mindset. And two things, as always, we're going to talk about education today. This is educational purpose is our purpose. And there's risk involved. So having the right mindset is going to be a big deal. Make sure I know you've seen this disclaimer a million times, and we put it in to protect you and to protect us, so we're clear on what this is supposed to achieve. Always, always, always remember those two things. You can't repeat it enough. Okay, the first thing about mindset is to embrace the idea of agility. So I'm going to talk to you about the mindset of usually, for most people, so we'll call this most investors. Okay, and then over here we're going to put professional. I don't even know how to spell professional. Professional?
Close enough.
Professional investors, or I should say better investors, people who are good at it, people who are down the education continuum ways. This is it. Up equals good.
Yeah.
Right? And down
equals
bad, and stagnant
equals boring or
equals
something.
boring. and so right here we have this thing here like this, and we have this thing here like this. And even if you watch CNBC, right? Even if you watch CNBC, people will say we're having a terrible day in the market today if it's down. Like, the Dow's down 300 points. It's a terrible day in the market. The market, great day for the markets today. The Dow's up 300 points. Great day for the market. Okay, that is not the mindset. It is not the CNBC mindset, okay? People that have a 401k, a super in Australia, an RRSP in Canada, that's the way they feel about it, okay? Okay, let me tell you what the reality is. You ready? If there's an up market, that's good. If there's a sideways market, that's good. And
absolutely.
If there's a down market, that's good. In fact, it might even be great.
It might be an even bigger smile.
Yeah. There you go.
You're showing teeth on that one.
Yeah, it's all good. Okay, no matter which one it is, it's all good. Okay, it's all good. And markets look like this. Markets come to a halt, markets pause, markets turn on, they turn off, they go up, they go up huge, they go down huge. They probably don't go backwards very often. But the reality of it is one of the things that makes paper assets different than real estate, or different than business, or different than commodities and stuff, is the agility of it, meaning that we have opportunity no matter what it is. So, if we're going to learn bearish strategies, that should make us excited. If we're going to learn cash flow, what we call delta neutral strategies, we talked about delta was movement. Well, if it's delta neutral, that means that it doesn't get affected much with movement, right? And so we really take this idea of embracing the agility, and we don't get emotional or care about whether the market goes up, down, or sideways. That's a really important mindset to have as a trader, because it'll always bring you opportunity. So, and this will come with experience maybe naturally, but the sooner I think a person can get there, the better. Is that a 400 point drop in the Dow is only bad if you're in the wrong position. A 400 point drop in the Dow is only bad if you're long stocks, right, Corey?
That's right. You can kind of think of it, we call it perma bulls, perma bears. You can also get locked into this mindset and this trap, like he's talking about, where you're always bullish or you're always bearish. Even if the market's going up, you're still negative, or even if the market's going down, you're still positive. And that can kind of be a dangerous thing. So we have to embrace the agility of the fact that the markets can go up, down, or sideways, and we want to be positioned with that. And even taking it one step further, it's not just the broad market. It's not just the S&P. You could have the S&P, the stock market as a whole, going up, but you can still find bear markets out there. Energy might be in a bear market. Oil might be in a bear market. So there's so many opportunities, and that is why we have a smile on all of those. We can find things that are going up. We can find some things that are going sideways, and we can find some things that are going down. And that can even reduce your portfolio risk, because now you have some going up and some going down and some going sideways. Now it kind of negates the market movement, and now it's about a stock picker. How good were you at picking your spots and your trades? And you'll get really good at that, So it's so fun to see people open up to this idea that I can make money while things go sideways. That's awesome, because markets go sideways a lot. And so we can embrace that and we can profit from it.
Awesome stuff. Absolutely true. So embrace the agility. Okay, next, we're going to be very mindful of our emotions. Now, let me show you why I chose those words very carefully. Some people say, you should trade without emotion. Good frickin' luck on that. Okay?
Yeah.
Good freaking luck on that. Look, we always do Star Trek on this one. Is you had Captain Kirk, you had Mr. Spock, and you had Dr. McCoy. Captain Kirk, Mr. Spock, and Dr. McCoy on the Starship Enterprise. Well, Captain Kirk would be a terrible trader because he's always overly excited and he doesn't think he can lose. And, they say, hey, the Klingons are outnumbers 1,000-1, and, you're going to go down there with they've got lasers, and you break a stick off the branch, and, the music comes, dun, 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 and Captain Kirk is going to save the day. So he would be a terrible trader because he's overly optimistic. He's very, very greedy about what he thinks could happen. Now, Dr. McCoy is a pessimist, and the reason Dr. McCoy was on Star Trek is very, very simple. It's because, Captain Kirk never loses. They get on a spaceship, they fly where no man's gone before, they face a moment of peril, and they come out conquer. Then he does the captain's log, and everything happily ever after. Well, Dr. McCoy's job is to make you believe that maybe this would be the last episode, that maybe the Klingons win this time. And so he says, damn it, Jim, or do you need a sedative? Are you crazy? And Captain Kirk says, I'm going down there. And McCoy says, well, we're probably going to die, but I'm going down there with you. So he's a pessimist, very pessimist. But the guy that would be the best trader is Mr. Spock, because he has no emotions. He's just going to do what's logical all the time. In other words, if he loses, he's not going to feel bad about it. And if he wins, he's not going to feel overly happy about it. He's not going to be scared of losing. He's not going to be greedy about winning. And to really rid yourself of emotions would be fantastic. But guess what? The thing that separates us from the Vulcans is we do have emotions. It's what makes us human, and you're going to have them. So the biggest emotion to be mindful of, because you're never going to get rid of it, is fear. So it isn't like you need to get rid of fear to trade. But there's really two types of fear that we're going to talk about here, okay? And you might have heard me talk about this before, so I'll be brief. The first is the fear of losing out. The fear of losing out on opportunity. A long, long time ago, opportunity. I don't know how. Is it opportunity? I don't know.
Yeah. O-T-U-N. There you go.
Opportunity. So a long, 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 long time ago, I bought this stuff called Bitcoin, and I bought it just to see what it would do and what it was like, and if it really worked, and how do you set up an account, and the best way to learn it was to do it. So I went out and bought a little bit of Bitcoin. And I forgot about it for like 3 years, okay, or 4 years, however long it was. And then a while back, a long time ago, all of a sudden I started getting calls, and people are like, it's up to $10,000 a coin, And I told my wife, I said, gee, I think I bought some of that years ago. And so I'd gone through like 5 different, wallets to finally find one that worked. And so I had to look up all these emails and find username and passwords from years ago. And I'll be darned, it was still there, and we'd made a little money. And I didn't even touch it. And then, it dropped back down, then it goes back up, and it just kind of is there. But during that first big push, like the first time it went up to $10,000, and I think it topped out at like $17,000, I was getting calls on this all the time, people that were panicked. Should I buy it? Am I missing out? Should I buy it? And the fear of losing out on this is called greed. When you feel greedy, it's that you see an opportunity and you just don't want to, you're just compelled to get in because you're scared. In other words, people were buying Bitcoin because they were scared not to own it. Does that sound weird? Let me say it again. People were buying Bitcoin because they were scared not to own it. What would you say? How would you interpret that phrase? People were buying Bitcoin because they were scared not to own it.
You know what? It's so true. Look at every bubble that's been in place, and it's driven by greed. The reason you get a bubble is because something logical becomes irrational, and it's animal spirits, right? So think about the tech bubble in the late 90s.
Yeah.
People were afraid of missing out. Tech was going to become the new market. You didn't want to own other stocks. You just wanted to own tech. And it didn't matter what they did. They were a website with no revenues, whatever.
Yep.
You bought it, right?
Yep.
And then it evolved to housing, and everybody was flipping houses and buying this and that. And so in the mid 2000s, the housing bubble burst. Why did it get driven up to that level? Because people saw their neighbor and their cousin and their brother making all this money, and they said, I'm not going to sit here and watch them make all this money and me miss out on the opportunity. So they pile in, and that's how these bubbles are formed. And Bitcoin, that was
Same
a
thing.
Perfect example where that flooded to the upside. It's not logical that an asset should go from $2,000 to $17,000, $18,000 in that initial spike in a 4-month period of time or whatever. That doesn't really make sense, but it's the fear of missing out. That's what creates that a bubbling emotion. And so the important part is that you recognize that. You'll recognize that from now on. You'll say, okay, is this reasonable, and is this logical, and is it moving up in an orderly fashion, or is this driven by emotion and the fear of missing out? And there's huge opportunity with bubbles, both to ride them up and to ride them down, in fact.
You mentioned the tech bubble, and it's the same as tulipomania, right? Tulips, tech bubble, whatever. But
That's right.
You mentioned the tech bubble, and it has this. Why would you buy a company that had 0 earnings, which would give it a PE ratio of infinity, right? Why would you buy a stock that had no earnings? Well, what if they start earning money someday, right? What if they do start earning money? What if it does go? And I'm not going to sit here and act like I'm immune to greed. Hey, when I saw that Bitcoin going up, number one, was I glad I bought some? Yeah, but was I thinking about buying more for about 1 second? Because I want to make money like anybody else, right? So I thought about it, but I was mindful of what I was feeling. It didn't get rid of my fear of losing out on a big windfall. Everybody wants a big windfall. But because I was mindful of it, I could recognize it for what it was. Now, the other fear is this one. This is a big one, is losing what you have. So to lose not what you might get, this is what you might get, right? This is what you might get. Well, to lose what you have, that's what happens on days where the Dow is down 400 points or whatever. People are losing what they've already got. Their 401k is melting down, and they panic because they're scared of losing what they have. Again, am I scared of losing what I have? Absolutely, but I'm going to be mindful. Now, think about this. If you were going to have your kid hit a baseball, okay, and he's going to go to the plate, would you want him to feel fear or confidence? And is he going to be, he can use all the same technique, he can use all the same, mechanics and all that he's practiced, but if he's in the batting cage practicing the nuts and bolts of this and the nuts and bolts of swinging the bat, but then all of a sudden he gets in a real game and he's either scared that he doesn't want to take a pitch, and take a strike because he's scared of missing out on the opportunity to hit a dinger, hit a home run, or maybe he's scared of striking out and losing his turn at bat. Either way, the fear is paralyzing to people, and you do not want to have fear. So here's what you do.
I love that analogy, Andy, because my son, so he plays baseball, and he got hit by a pitch. And for a day or two after that, he was afraid of, it hurt him, right?
Yep.
And so once you've had that pain, it kind of sticks with you, and that can happen in the market. Maybe some of you, have some of all of us, right? We've felt some pain from a losing position or something like that, and we don't want to repeat that. But what I was teaching him at the time was understand that if you're up there confident and ready, you're going to be far more likely to dodge that pitch if it's coming at you than if you're up there afraid. And that's a strange thing. But actually, if you're up there afraid and already kind of bailing out and whatnot, there's no way you're going to hit the ball. And you're actually more likely to get hit than if you're in there confident, seeing things and just ready to dodge if it comes to that. And that's a hard thing to kind of teach people, but it's a great analogy because you're mindful of it. You're in there confident, and you'll be more ready to not only hit the ball, but also to dodge it if it's coming at you. So if a risk, to take that to the markets, you'll be more prepared to swing at the pitches that you're going to make money on. And if there's one that's coming at you, you're going to be more prepared to get out of it with a lesser loss, to dodge that pitch that's coming at you and it's going to hit you and it's going to hurt. You'll know, and you'll have the tools to bail out before it hits you. It's a great analogy.
It's fantastic. Now, let's say one more thing about this, because we're going to tell you how to deal with emotions, and I'm going to do it in two ways. First, this is a really bad metaphor, but it's the best one I've ever been able to come up with, and it's this. It's Vegas. And on Vegas, you really have two sides to the coin here. You have on one side the guy that is going to gamble, and he feels both greed and he feels the panic of loss, right? So we'll call it greed and panic. The greed of fearing out on what he could win. Oh, I want to double down because I might win. Or the panic of watching his chips go away. And he will exclaim when he wins. When he wins, he will feel great about it. And when he loses, he will feel bad about it. And those are the emotions he will feel. He'll feel greed, he'll feel panic, he'll feel excitement and jubilation at a win, and he'll feel terror and depression at a loss. And that's what he goes through. On the Vegas side, they don't have a gambler. What they have is called a dealer. And the dealer will simply, and we're going to talk about this, the dealer will simply follow rules. And the dealer is not concerned about whether he will win that hand of blackjack, and the dealer is not concerned whether he'll lose that hand of blackjack. He knows the numbers over the long term. He knows the numbers over the long term. He knows beforehand that some hands he will win and some hands he will lose. And he has accepted that fact. He knows that his system will produce more wins than losses, and he knows that the wins will probably be bigger than the losses. He will limit his losses. And so the dealer...
Yeah, great point. He sets table limits. So how much he's willing to lose. He knows going in, here's our cap on this, and here's what we're willing to do. Because it works in his favor.
100%. You will not see the dealer exclaim on a win, and you will not see him flail his arms on a loss. The guy is made out of cardboard, okay? It's no different than if you were playing video poker with a machine. Complete Mr. Spock, complete lack of emotion. Well,
unless it's Clark Griswold playing in Vegas.
Then you might get a little,
Then the dealer might be ecstatic when he's winning. But,
and they might wind up with a battle of wits, if I remember right? I mean, there could be.
Then he has to go to the
iocane poison, right? Iocane poison. Isn't that the iocane poison guy? So there you go. But the reality of it is the reason he's not emotional. It's not his money. It's the casino's money. So my counsel is to be mindful. So if you find yourself feeling the fear of losing out, right, that Bitcoin stuff, if that comes into your life again or whatever, saying, oh my gosh, I think I'm going to miss out, okay, get away from your computer, sit down and say, what are my rules? What are my rules? If you begin to panic and feel that you're losing, what are my rules? What are my exit strategy? And if I'm mindful, I can manage those emotions by going to my rules. And if I use my 4 pillars, the fourth one being risk management, we're going to talk about that in a minute. If I'm managing my risk, then that will take my emotions back down to something I can manage. Very, very important. Okay. Might be the most important slide in the series. I mean, not in this class, in the whole freaking series. This might be the most important slide ever for option traders ever, is get good at losing. Now, that sounds crazy to someone like me that's competitive. You have to get good at losing. That's crazy. When would you ever want to lose a game? When would you ever want to strike out? When would you ever want to lose? Well, guess what? In stock trading, you want to lose. So let's talk a little bit about this. Here is a reality. You are going. This is not a might. You are going to have trades that don't work out. If I take you to a casino and we watch all day long, the dealer is going to have some times where he loses. They say the house always wins. No, it doesn't. It wins over time in the long term, but it doesn't win every hand. Let me say that again. The house does not win every hand. And you are going, if you pursue this at all, you are going to have a trade where you do your fundamental analysis with your 4 pillars, your technical analysis, take a position of cash flow, put in your risk management, and guess what? You're going to be glad you did that because the market will change. There'll be something you didn't think of, something unexpected will happen, something unpredictable. The defining characteristic of this market is its unpredictability. I don't care how awesome the 4 pillars are. They are not a way to trade without a losing trade. You're going to have trades that don't work out. So the idea, the goal is not to win every time. That is not the goal. Absolutely not the goal. The goal is to win more than you lose and to cut losses short. Don't take a max loss. In the Mentor Club, if you understand the principle of an iron condor at all, you'll know that there are times to absolutely let that trade go. Now, this is really important, Corey, is how does it feel to new traders and even experienced ones to some degree? How does it feel to lose money? Will you ever lose money and be happy about it? Hopefully you can someday. Hopefully you can.
And it doesn't really matter how long you've traded or, I mean, you're still going to feel that emotion. And so it's important to understand that. But it's also important. Remember, we talked about going back to your rules. You're going to have rules in place. And this is very important because it'll bring you back to what's the right decision that I should make with this trade. And it always comes back to get good at losing small. So if the trade is not working as planned and it's breaking your thesis of how it should work, go back to your rules and get the loss small. And when you do that, you're practicing great habits, and it's so critical. I mean, I tell my kids, there's a great book about, what do you practice? And so I tell my kids this in terms of kind of how they treat other people and how they treat their siblings and so forth. I say, what do you practice? Because what you practice is what you're going to be.
Yep.
Right? So if you practice taking small losses, you're going to practice the right approach and be a good trader.
Agreed.
If you practice holding on and hoping for a better day down the road and hoping that this small loss will turn into a big winner, and you let that loss get bigger and bigger until you're finally taking max losses constantly, big losses, you're practicing bad habits, which will make you a bad trader. It's just, what do you practice? So, if you practice treating people well, you'll treat people well and you'll have a better disposition. You'll be happier. Well, in trading, if you practice taking smaller losses, you're going to be a better trader. And that should matter most, right? We want to make money on every trade, but since that's not reality, let's do the right thing. Let's get back to our rules, take those small losses. And if you do that, there is a lot of money to be made in the markets.
Now, listen very carefully, and we'll be identifying this even further, but every trade you ever make, you should say, and we're going to define this in every trade, Corey, right? Is we're going to say, look,
yep,
your reward, let's say your reward is $100. That's the best that could happen in this scenario, right? Sometimes your reward would be infinity, right? Some of your time reward might be like, in this one, we're going to say the best we can do in this trade is $100. Okay, then we're going to say the worst we can do is to lose $1,000. So right there, someone says, well, I don't know if I like that idea, but what if I said the probability of getting the $100 is 90% success? 90% success. Well, what that means is if you execute this strategy, okay, over the long term like a gambler, okay, what would happen is you'd make $100 most likely that month. And $100 here and $100 here. We'll just spread these out. $100, $100, $100, we'll put 110 on that one. $100 and $100. And on this month number 7, you would lose, let's say, $1,000. Okay, right here. Now watch this. So what that means is if we were to add up the wins and losses, 100, 200, 300, 400, 500, 600, 700, 800, 900 on the plus side, and then a loss of 1,000, that means I'm down $100 after all this work. Now watch this, and we don't even need to call this months. We could call this trades, right? You don't even have to be month. It could be trades because that's the numbers. Okay, now watch this. Let's say we do the same thing. 3, 4, 5, 6, 7, 8, 9, 10. And we make let's go back to that. We make $100. And we make 100, and we'll do the same thing on all these same trades, right? Okay, that was the nasty one where it didn't work out. And let's say now that I cut this loss even just in half. So here I lose $500, right? Now I'm going to be up $400. So instead of being down 100, I'm up $400. 1, 2, 3, 4, 5, 600, 700, 800, 900 minus that nasty $500 one. Now here's what's interesting. Is a $500 loss sucks emotionally, especially when it's compared to only a $100 gain that makes you feel good emotionally. And the temptation is to try to save this trade and to turn this trade into a win. That's what people want to do. They don't ever want to have a loss. Just please hear me. Please, as your coach, I'm on my hands and knees. I don't beg very often in life, but I'm on my hands and knees saying, please be smart and don't just understand that will never feel good, ever. It is never a good feeling to say, dang it, I got beat. Dang it, I'm going to lose $500. But the reality is that can be your choice. Most of the time, the vast majority of the time, you can see this coming. You can take this loss, and that's second. Next is we'll talk later in risk management is your position size. We never want to make this our entire account. Okay, we never want to give the market a chance to take away. Corey talked about table limits in Vegas. What a table limit does in Vegas, it prevents the casino from ever being put in a position where it could be wiped out on a single trade. Now, if they lost 800,000 times in a row, might clean them out, but that's not likely to happen. That's their risk, and the numbers, really, it's not a risk because the numbers are in their favor. But the difference between losing a little and what we would call a max loss here, the worst that could happen, a max loss changes a person by over 400%. Okay, it's that big of a deal in your account. So I cannot say enough about this. This comes down to position size, right, and being able to take a loss when you're supposed to take a loss. This will happen. This will happen. And what a guy that can't do this and fights it and turns this into this winds up here. The guy that cannot do this will wind up over here. The guy that cannot take a little loss will wind up taking a max loss, and they will go from being a profitable trader to a trader that loses. What are your comments?
I would say, to your point, this is the most important concept you're going to learn. This is trading in a nutshell. And so think about the emotions involved in this, right? Because you have to feel the emotion to be able to recognize it and to be able to do something about it. And in the moment, if you just think, well, I'm just going to make the right decision when it comes to that point, you're not going to, most people anyway, I'll speak for myself, you can't just make that decision in the moment just because. You have to have rules in place. So it was a great point by Andy earlier. When you feel greed and when you feel fear and you feel these emotions, and when you're taking a loss and you can feel it, right? There's some pain involved when a trade's going against you. You need to go back to your rules, and your rules will guide you, because trying to overcome the emotion, that feeling that you have, just feel like you can overcome it or something in the moment, that's not going to work.
Not
but
happening.
If you trade it based on rules and systematically, that's where you can do this. You can say, you know what? When this trade goes to this point, I'm going to cut the loss. And I've got my game plan ahead of time. And when this happens, if it happens, I can make an adjustment. I can exit this trade. I can do something to always keep my losses smaller And by doing that, the numbers work out much more in your favor. And there's also kind of a psychological aspect to it as well, where psychologically taking smaller losses weighs you down less than taking big losses.
Yep.
You know, when you take a big loss, it's a big psychological hit. If you take smaller losses, not only is it better for your account over time, but it's also a lot better for you psychologically. You feel better, and traders feel better when they're more confident and when they're optimistic and they don't feel like the market's out to get them and so forth. And usually those sentiments, those feelings that you have that the market's out to get you and all of that, that comes from emotion of, you know, you're the cause. You're the reason that these things are happening. You know, it's not the market. The market will go up, it'll go down, it'll go sideways. You're the component that has to be more systematic and less emotional. And if you can do that, there's, like I said, there's great success waiting.
High hopes for you. Yep. I'll tell you what, this always feels good. Every time this feels good. You know, I'm in a trade right now in a short strangle, and that sucker is right dead in the middle. Volatility has dropped. We'll learn about this, and I'm almost at max profit. And I look at that, and when I do, dopamine, it's a drug.
Great, yep.
I mean, dopamine is in my system. Hey, am I on drugs? Every day I look at a chart like that, I'm addicted to that. And so when you nestle a negative, when it's always been so positive, the desire to want to turn this frown upside down and smile that frown away is really, really strong. To tweak it, to stick with it, to try to turn the winner into a loser, to try to get this good feeling out of this instead of the bad feeling, it is overwhelming for most people. And I would say that is the biggest reason that most people cannot do this, is they just can't get over losing at all and having that. So that's
it. That is the hurdle. Yep.
So here is what you are going to do. Okay, wax on, wax off, Mr. Miyagi talking at you here. We're going to do the next two sessions. We're going to do one on risk management, and then we're going to do one on a trading journal. And I'm going to pound on risk management next. But in the trading journal, you'll see a place, and we're going to set this up now, where it says notes. And in the notes, you're going to talk about what you did, but more importantly, you're going to talk about how you felt. You're going to talk about your feelings. I know this sounds, really, really, I don't know. I like Oprah. I don't want to slam Oprah, but it sounds like an Oprah, kind of touchy-feely, right? Get in tune with your emotions type stuff. But and I'm kind of a man's man, so I'm still a crier in all this. But I'm going to tell you right now, we got to talk about our emotions. And if you will journal and say, "Gee, when I sold this, how did I feel when I took this loss?" You'll begin to be more mindful of that. You'll begin to deal with it better. And you can actually turn this into a positive experience by realizing you were smart. By realizing you were smart.
And we're going to give all of you access to the journal if you haven't already downloaded it. So to use an Oprah analogy, you get a journal, and you get a journal, and you get a journal.
You get a journal, and you get a journal too. And so you're going to put in the notes section, you say, look, when I had this loss, this is how I felt about it. And you're going to get good at this. You're going to get good at losing small. I'm telling you, I'm pounding it and pounding it. You're like, Andy, I got it. And guess what? I'm going to pound it some more. Because when you get good at this one, man, you're in such a better situation. This is it. This is that's the trade that can blow up people's accounts. That's it. Turning the winner into the loser into the winner. It's an exercise in futility, except now that you will have losing trades. And when you do, we're going to minimize that loss and keep the position small. End of story.
And your position size, which you mentioned, is critical, because if you position size too large to where you're risking, heaven forbid, your entire portfolio or some huge percentage of
it'll catch you.
Which you shouldn't be doing. But if you did that, then you're trapped, because then you're like, well, I can't take this loss. I can't survive, And so that's a huge thing. Position size so that even the worst case scenario you can live with, right? It's a reasonable amount. And then taking the lesser loss won't feel so bad, because you'll be like, well, I could have taken the max loss. The lesser loss isn't too big of a deal. I can certainly overcome that. So position sizing is critical. Do not put all of your eggs in one basket, as they say. Do not put all of your capital into single trades or even over into 5 trades all at once or anything like that. We're going to position size appropriately.
Don't expose your heart, man. Wear your bulletproof vest. Don't expose your heart.
Yep.
Don't give that lucky shot a chance to happen. Don't give the market a chance to beat you. Just like the casino will not give you a chance to beat you on one spin of the wheel. They won't do it. They have a table limit that says, look, we refuse to expose ourselves to losing on one single spin of the wheel. Same with you. You're not going to expose yourself on one. Okay, using the system. Now, I like our 4-pillar system. It's the system that we've taught. It's the system, and you may have a different system you choose eventually to use sometime. That's fine. But I would say it's kind of like offense and defense, in basketball. Look, Jim Boeheim at Syracuse has won a national championship with a zone. Mike Krzyzewski has won a national championship with a man-to-man. Rick Majerus got to the finals by beating Arizona with a triangle and 2. So you can use any defense you want, but you got to play D. You got to have a system. You got to choose one. You can't be arbitrarily, going crazy. So you get a chance to choose a system. Our system is based on fundamentals, technicals, cash flow, and risk management. And there can be a temptation to go outside of that system. Again, remember Bitcoin, okay? The biggest problem I had with Bitcoin was here, okay? We had this, and we knew how to maybe do some of this, but I didn't think that this fit the criteria for me. Fundamentally, it's very global. Technically, it was very volatile all over the place. It just wasn't the best thing. Even without those, though, if you have this one, you're going to be okay. You won't lose a lot, but you probably won't necessarily gain a lot either. This will protect you from losing stuff, but this gives you the best chance to win stuff and to do well in it. And so use a system. The system we're going to be using is called the 4 pillars of investing. We're going to look at fundamentals, technicals, choose a cash flow strategy, and manage our risk. You have a system of trading, and you'll find that the best thing to hear is to start getting into coaches. We like the idea of small group coaching, small teams of people where you get 4, 5, 6 traders together that have similar goals, and they start learning and hone their system. For example, Corey specializes in really, I would say most of his system is about the S&P 500. That means his fundamentals are going to be global and national. It means his technicals are going to be the S&P chart, and he's going to use credit trades to bring in cash flow, and he's going to manage that risk with position sizing and knowing how to take a loss. Am I pretty close on your system, Corey?
Yeah, spot on. Yep. And risk management is critical, and you'll notice that everyone's systems can kind of differ, right? It's a personality thing. What fits your approach and your personality, and that's fine. But risk management, all of these things, you could have a little bit different style to technicals, or you could have a little bit different style even on your risk management. But it's critical you have each one of these elements, because risk management is really what it all boils down to. In my opinion, it is the foundation of profitable trading. So you can have someone that's great with charts, and they can pick their spots and they can identify opportunities. But if their risk management is poor, they'll never quite turn the corner in their trading.
Yep.
Right? Because it doesn't matter how good you are. You might be able to pick 7 times out of 10, this stock's going to do that. The question is, how are you going to handle those 3 losses? Because if you can take small losses, and that's all risk management is if you can cut those losers where you're 3 times you're wrong, you take a small loss, and you're 7 times you're right, you make more money than that, you're going to have a very profitable system. And the fact that you're great at charts is going to work for you. But if you don't have good risk management, you're not going to make it, So take pride in that. Take pride in the fact that, I think of it like an insurance company. And if you have an insurance company like Geico, they take pride in the fact that when they lose a reasonable amount. It's all built into their plan. Sometimes things don't go as planned and they have to take a loss on this life insurance policy or this car wreck, or this natural disaster. They take pride in the fact that they've managed their risk so that they're still going to be profitable over time. And you as a trader, you've got to think of this as a business. In a business, it doesn't matter that you take some losses here and there, you're profiting overall. And if you have that mindset as a trader, you can do great things with it. So take pride in your risk management.
Okay, and I'm going to put in my 2 cents on this too, Corey. I have traveled the world, okay? I'm telling you, for 20 plus years, I don't know how, maybe it's 30 now, I don't know. I'm an old man now. But I have spoken face to face with thousands and thousands and thousands of traders and would-be investors and traders, okay? I have done more seminars and thousands of meetings, which translates to tens of thousands of people. It might be close to 1 million. I don't know how many it is. It's massive sampling. Never one time ever did I have someone brag about a loss to me, about limiting a loss to me, where that's what they were proud of. I never had anyone come to me, and you might not understand this, and say, oh, I was in this iron condor, and it looked like this, and all of a sudden I woke up here, and I was in trouble. So right when it got right around the theta switch, and the stock got here, I put some delta hedge on it that flattened out that graph. And now I couldn't take my max loss. No matter how far it went down, I couldn't get down to that max loss that was down here. Couldn't happen. And doggone it, I was hoping that it would hop back up and stop me out and get me, but it didn't. So I took this loss right here. And I was so proud that I had the ability to do that, because everyone else would have taken a max loss, and I didn't. Never one time, Corey, in 1 million people did anyone come up and take pride in their ability to save a trade that went crappy, that saved a trade where they were wrong. Do you know what I always hear about? It's like the casino winners on the wall. Yeah, they'll show, Gertrude Mahovnovitz or whoever on the board who won $5,000 in a slot machine, and she's standing there smiling with her picture being taken with her $5,000 slot machine winnings in, freaking some casino in
Reno,
in Wendover, Nevada. But they didn't take a picture of the $10,000 she's lost over the last 5 years in casinos trying to win that $5,000, right? They only show the winnings. And people would come into me, and I get it I got it in, just like we were talking about a while back, Bitcoin went big. I had people coming to me, I bought Bitcoin at this, and look at, and they're bragging the heck out of it, right? No one ever came to me and said, I bought Bitcoin at 17,000. I bought it at the top, but I had a stop loss in at 16,500, and I only lost $500 per Bitcoin. I never had anyone tell me that. No one ever told me about the loss they had that saved their account from blowing up. They don't take pride in being able to manage their risk. They take pride in being able to pick winners, not defend losers.
It's funny because I would find that far more impressive. Don't tell me about your gains. Tell me how you take your losses. That's going to tell me what type of trader you are. So if you tell me, hey, I chased the bubble in Bitcoin and I got in at 17,000, but I got stopped out at 16,000 and I didn't write it all the way back down to 6,000 or, these numbers that it fell to in a month's time, I'd say, wow, that's great risk management. You've got a future in this.
I remember,
more impressive.
I remember Corey used to have a strategy called the 7-minute trader strategy or something like that. and it was on the S&P 500, and I think you were selling weekly options on the S&P, and you had a program helping people do it, and I think you went, Gal, I want to say you might have gone 2 years without a loss, like every week.
Yeah, it was crazy.
It was
long.
some insane
Crazy
thing.
long.
And then all of a sudden, one week, you had a loss, you managed the risk, and you took a loss, and people lost their minds. They completely lost their minds. And you're like, dude, we limited this loss.
I was more proud of that
week
than the long winning streak.
Yes.
Yeah.
That week, I was more proud because the market just got its butt kicked, and I was more proud to say, I am Corey Halliday's friend in that week than like the 2-year streak. I mean, it was like an insane I don't know. How long was it? It was this insane streak. I want to say it was like a couple years. Is that off?
It was long. It was in that neighborhood.
Yeah.
It
was crazy. And so that's the thing. So summarize. And you could tell we're more passionate about this. I'm screaming in my office here. Okay. Embrace agility. There is no such thing as a bad market anymore for us. We don't care if it goes up, down, or sideways. Be mindful of your emotions. You're not going to get rid of them. You'll be able to bridle your passions, as they say, as you go forward, the more you journal. But always be mindful of how you're feeling. Mindfulness and being present and in tune with how you're feeling helps you calm down. I used to do this as a basketball player, and I do it now as a basketball coach. I will call time out, and I'll ask the kids. I'll say, how are you feeling right now? Let's talk about it. Where are these feelings coming from? And as you begin to talk about them, you begin to understand them and put them in their proper place, and you can move forward. So be mindful of, don't get caught trading greedy without realizing you're greedy. What I'm saying is, have you ever been in an argument with someone who all of a sudden you started getting really heated and you didn't realize that you'd gotten there until after? Right? In the moment, you didn't realize you were getting angry. You didn't realize that you just got angry, but you weren't mindful of it. This is called emotional intelligence or emotional awareness. Being mindful of those emotions are huge. You'll begin to bridle them better. You'll never eliminate them, but you'll bridle them and control them better. Okay, this is the biggest cockeyed thing right here. Get good at losing small. You're going to see that over and over and over against a trader. You might not understand this as well. You might say, yeah, I got it. Yeah, I got it. Lose small, I got it. But I'll tell you, 6 months from now, when you've been paper trading, when you've been doing, you'll really understand that then. You'll really understand it then. Use your system. Don't go outside of it. Don't get caught up in trades that are outside the system where your brother-in-law says, hey, we got a penny stock. This is going to be huge. That comes from the greed and panic. I'm so tired of people coming to me saying, hey, Andy, I heard about this really cool penny stock. What do you think? Look, it's not what I do. It's not in my system. It's not how I trade. Andy, what do you think about Bitcoin? It's not what I do. Look, do what's within your system. If your system is working, then don't get caught up in the greed of leaving it. Because the only time you leave your system is when you're greedy or when you're panicking. The only time you leave your system is when you're greedy and when you're panicking.
Do you ever get this? You're on a plane or something, and someone will ask you what you do, and you say, I
trade a little bit,
financial markets and trade, and they'll say, oh, give me a stock tip.
Yeah.
And so I think about that, and I don't ever give a stock tip, but if you were going to give a stock tip, you'd say, well, I think, XYZ is set up for a nice iron condor, but if it goes to the theta switch area, you're going to need a delta hedge that with a,
with a
and
future
all of a sudden
on,
they're like,
you want to buy a future on the Russell 2000 to hedge that with a stop loss if it reverses. Yeah, exactly.
Yeah. And that sounds crazy complex. And of course that person won't have any understanding of it. You know what? After we're done with this course, you're going to understand
all of it,
how you can take off, you can adjust, and so now you're going to be following your system. The stuff that you put in there that is specific to you and your personality and your style of trading. And, people will start asking you for a stock tip and you won't be able to give it to them because they won't understand the risk management, the position sizing, and all of the critical elements. But you do, and that's cool.
You've got it, Corey. People think that it's about picking the stock. It's not. It's
It's
not.
yep.
It's look. It's not about the house you bought. It's about the insurance on the house you bought. It's not about the car you bought. It's about the insurance on the car you bought. I had a guy come up to me one time. It was on an airplane, and that's what made me think of the story. Is he started talking penny stocks, and he said, "Look," and the guy didn't even know me, right? And he says, "Look, I don't have an account, dude. Could I just email you, and I'll send you $5,000, and you could just trade this in your account for me, in my behalf. I'll just send you the money." And I said, and you know what I said to him? I said, "I'll tell you what, do this. Write me the check for $5,000. I'll cash it, put it in my pocket, and then I'll punch you in the stomach as hard as I possibly can, and you'll have the same experience on your end. It's just I'll be $5,000 richer instead of someone else.
Yeah.
Because either way, you're going to be poor." I said, I says, "I will hit you as hard as I can, right in the stomach, and you just give me your $5,000, and you'll have the same experience as if I trade that penny stock for you."
That's right.
Okay, risk management. That's the next one we're going to take a look at. That's the one we're going to take a look at in our next series, and I hope you enjoyed this. Look, this is a little bit about. It's not about strike prices, and people want to know deltas and thetas, and I want to know about the risk graph and the nuts and bolts. Look, we're getting close to starting to trade here. Okay, we've been waxing on and waxing off. You've been doing what I've asked you to do. You've spent hopefully some weeks now. Hopefully it's been weeks of studying this and practicing it. And we're getting ready to get in the fight here. We're getting ready to, be where Johnny's going to sweep your leg and you're going to have to do that crane move. So by having the right mindset, we're getting closer and closer to saying, okay, here's how we're going to do trades. I wish I'd have learned this before people taught me nuts and bolts. You can feel the wisdom in it as you listen to Corey. You can feel the wisdom in this stuff before. It's the course I wish I could have had before I took one. Mindset.
So true.
All right.
So true.
Great job. And let's rock. Let's move into the next segment.